Yet, a project like Qianhai is beguiling because most observers see a division of labor between Shenzhen and Hong Kong. If Shenzhen provides the R&D and industrial might, then Hong Kong provides the financial might and links to the outside world. Figure 3 from our paper shows innovation in a range of areas that any innovation zone would require in order to succeed. Thus, in terms of high-tech exports, knowledge creation, a GDP growth, knowledge impact, new business development, the production of publications and the citation of those publications, Shenzhen has a clear advantage over Hong Kong, at least according to the Global Innovation Index. Yet Hong Kong is more competitive in royalties and license fees, as well as sending money out of the area. While Shenzhen may invest far more resources into R&D and production, Hong Kong clearly has the institutional infrastructure needed for any profitable commercial area. Figure 4 shows innovation index scores in a range of general areas that any innovation zone would require. Thus, Hong Kong's institutions score almost twice as well in terms of innovation index scores. Hong Kong's scores come out at roughly twice Shenzhen's scores, as does Hong Kong's market sophistication. Hong Kong also leads Shenzhen in terms of its creative outputs, its overall infrastructure, its human capital and research, as well as its business sophistication. Yet we see Shenzhen very quickly catching up in terms of human capital and business sophistication, leading many observers to ask whether Hong Kong and Shenzhen are truly complements or rivals. No matter the answer to that question, high-tech integration in the region would certainly help Hong Kong develop its high-tech industries. Figure 24 from our paper shows high-tech exports coming out of Shenzhen and Hong Kong. And as we see, Shenzhen's high-tech exports took off in 2010 and remained well above those of Hong Kong after that time. Figure 30 shows that on average, Shenzhen's R&D spending outstrips that of Hong Kong, and Hong Kong companies tend to employ far more asset than their Shenzhen rivals in order to produce the types of innovations and high-tech export the region needs in order to compete in the global marketplace. So looking at the overall picture portrayed in these infographics, one might see Shenzhen as the smart part of the cooperation and Hong Kong as the connected part. Moreover, R&D spending tends to have different effects in each of these regions. If we look at the most important measure of the impact of such R&D spending, we see that profits from R&D, as measured by EBITDA, or earnings before interest, tax, depreciation, and amortization, we see that Shenzhen's companies tend to convert R&D spending much more efficiently into profits than Hong Kong companies. We see that not only is such R&D spending more profitable, but such spending grows far more quickly in Shenzhen than in Hong Kong. Since 2008, Hong Kong's R&D expenditure has increased by roughly 6% on average, whereas in Shenzhen's R&D spending has increased by roughly 25–26%. And expressed as a total of the gross metropolitan product, we see that Shenzhen's R&D spending weighs in at roughly 3 times that of Hong Kong spending. And indeed, if such money actually went into R&D spending in Hong Kong, if we use past data as a reliable guide to the future, we would see that profits in these Hong Kong innovation-centered companies would increase by roughly 16 million Hong Kong dollars per company per year.